Welcome to Real Conversations with Patricia Baranovsky-Schneider, the podcast that takes you on a journey around the world to meet some of the most inspiring and accomplished individuals. Discover their stories, uncover invaluable business lessons from their paths to success, and gain exclusive insights on how to apply their strategies to elevate your life and business.
Hello, and welcome to Real Conversations with Patricia. I'm your host, Patty Baranowski-Schneider. Today, I'm joined by Joshua Krafchick. So welcome, Joshua. Tell us a little bit about yourself.
Yeah, thank you. I started a company called 369 Financial to help educate and show people the best ways to grow their wealth.
That's a pretty cool thing to have nowadays.
Yeah.
Now, your journey into financial services, it began in 2013. So what was the turning point that made you realize you wanted to create something different with 369 Financial?
Well, my first job when I graduated out of school, I quit after being there only 3 months.
Wow.
My manager told me that the company that I worked for doesn't give any financial advice and guidance, and she basically reprimanded me like I was a little kid. And I was just like, well, this is a big problem, so there has to be a solution. So after getting enough experience and when I felt confident enough to leave corporate America, I decided to venture off in 2017. And there was about 3 years of struggle and overcoming a lot of obstacles. And there's still obstacles to overcome before I actually started 369 Financial in February of 2020. So if you can imagine February 2020, that's when I was starting a company.
Wow. Well, good for you. Now, you mentioned being disillusioned early on by advisors that act more like salespeople. So how has that experience shaped your approach to financial advising today?
Yeah, I mean, I start following a lot of these financial folks on social media to see what they're saying because I'm getting a lot of ads. And I'm like, yeah, let me follow and see what people are saying. They're all saying the same things like, why is Warren Buffett hoarding cash? Why is this happening? Are you ready? Do you know what's going to happen? Well, the answer is no one knows what's going to happen, because if everyone knew what was going to happen, then everyone would be very, very rich.
Right?
So, I mean, there's no magic solution. There's no magic product. There's no magic pill that you can take and magically make all of your worries and troubles and problems disappear. Investing is a very meticulous, boring subject, and it takes mindset more than intellect in order to be successful. And that's where most people get wrong, because everyone gets emotional with money.
It's funny. Back in the day, I was day trading, and they always say, take your emotion out of it. And it's impossible. The funny part was when I started, I was doing paper trade, but make-believe money, and no emotion whatsoever. You lose 10,000, no big deal. Tomorrow's another day. Set it and forget it. Once I started to do it with my own money, I was doing the complete opposite. I'm investing. You lose some, and I'm like, oh my God, I got to get out. I get out. The stock goes up. I go back in, and I'm doing the opposite. Instead of buy low, sell high, I'm selling low and buying high. And the funny part was I forgot about the paper account, and I look back on it years. I would be a billionaire today if I would have actually. But it's very hard to not have your money and your emotions. And I agree with you say 100% about the sales, because even at one point I was interviewing, and I do investor relations, public relation marketing. And so when people say financial communication to me, I'm like, okay, I know how to do that. And it's basically all sales for financial companies. They want you to be a salesman to sell, whether it be insurance or investment strategy. And I'm like, I'm not a salesperson. That's just not my forte. But that's exactly what they want. They want salespeople who can push this along. And it's like, do you really have the investor's best interests at heart? Because back in the day, I had, single mom, I had my kids' money. And the financial people, because I wasn't a billionaire, I wasn't their top client, they lost every penny I had. I understand the stock markets go up and go down, but they didn't educate me on what they were doing. It was just, oh, we have you. So I get it. I'm glad that you're, taking the bull by the horn, so to speak, and doing what's right by your investors.
Yeah, I mean, I do my best.
Yeah.
How our clients perform dictates how I perform.
Yeah.
there have been times where like clients sign up and it's like the wrong time and their timing is off. And like, I do feel bad about that. It doesn't keep me up at night because like, I understand like, hey, like you pick one bad time in the market, it could take a lot longer to rebound compared if you pick a really good time. But investing isn't like a 5-year or even a 10-year time period. It's a lifetime time period. So you have to measure yourself from now till forever.
Right.
And that's the hard part is you don't know where it's going to go.
Right. But even still with like, age groups. So just for example, my mom, she's in her 80s. And so obviously when you try to guesstimate the time frame of how long you're going to be with us, you wouldn't put them in super risky things because your time frame might be a little less, so you kind of tailor the investment strategy based on people's circumstances, and a lot of places don't even care about that. They just want to know, where can I get the income from?
Right. Well, I wouldn't want to put anyone, regardless of age, demographic, or background, into something that I feel is risky, because risky to me means uncertainty. And with investing, you want as little uncertainty as possible. When you make a decision, you want to have a lot of conviction and be like, all right, I learned this in the book called The Down Doe Investor by Monish Pabrai. When you look at every investment situation, you want to look at heads I win, tails I don't lose much. So it's like you're going into it, you're like, all right, the downside is I could lose this, but the upside is this, and you do your homework and then you make a decision. You're going to be wrong. Investing is not a perfect game. However, if you're correct more than you're wrong, those correct decisions could vastly outweigh your poor decisions over time.
Yeah, good stuff. Now, you focus on serving family-oriented, growth-minded professionals who believe in giving back. So why is that specific group so important to you, and how do you tailor your strategies to serve them best?
Well, everyone I talk to in marketing is like, you need a niche. You need a niche. Who do you serve, Josh? You got to get very specific. I just can't do that. That's just not how I operate. So I looked at like, what does 369 financial mean? 369 stands for growth, family, philanthropy. So we always want to be growing. We want to have strong family values. And then it's important not just to take, but to also give back. So I figured, rather than saying I work with CEOs that are in the healthcare space that are between the ages of 52 and 55 years old that live in middle America, very specific niche. I'm more of an open-ended, creative thinker, which I believe helps me imagine where an investment could go in the future. So I want to attract people who are growth-minded, meaning they want to do better. Family-oriented doesn't mean necessarily you have a family. Someone doesn't need to have like a wife, a husband, or spouse and kids to be family-oriented. So if I say I work with families, I'm excluding a vast amount of people who could be very family-oriented. Maybe they just don't like have, the home with the kids and the spouse yet. And then I want people who give back, because no matter how much money you have, there's people out there who are only focused on themselves. And those are the sort of folks that I want to avoid, because those are going to be the biggest pain in the butt to work with.
No, I mean, that makes total sense, because it is true. Same with me with marketing. I mean, I'm probably the worst case study for this, because I'm the same. I do IRP on marketing with clients around the world, every niche under the sun, and people are like, you sound like you're all over the place. I'm like, I am, but I've been doing this 35 years. It's what I do. And it's hard to segment to just a specific thing, especially with investing, because everybody wants to have some sort of growth with their money. You can't really specify a specific niche. So I totally get it.
Yeah,
So,
I mean, I'm not a big company, so I mean, I'm not like, hey, we only work with people who have family assets of 10 million or more or anything like that. We're still growing, and we're able to help good people, and it doesn't matter like really how much money you have.
I think that's an awesome philosophy. Speaking of, let's talk market psychology. So how do you help clients stay grounded when emotions run high, especially in booming markets or during a sudden downturn?
Well, right now we're going through some tough times. So halfway last year, I made a tough decision to make some strategic moves. And I made those strategic moves and our accounts were going up, but they weren't going up as fast as I would like. And I was like, oh no, did I make the wrong decision? Did I make my decision too early? Was I correct? And maybe my timing was off. But I didn't change it. I was like, I made this decision for a reason. I thought long, hard about it, did the research, made the decision. And I was like, I got to stand by the decision. It could take a little while to materialize. So I made that decision, and that decision has helped our clients not feel as much pain as other people are feeling right now. And I let them know through videos. So I make videos and I send it to all of our clients via email. And I can send the same message to 1 billion people if I wanted to. If we have 1 billion clients or 2 clients, everyone's getting the same message. Everyone's getting the same exact thought process and like why I made a decision and what I'm expecting. And that way I don't have to have 500 conversations with 500 people like the old brokers of the day on the cell phone or on their headset.
No, that's
So
super
using
important.
technology to get the same message out there and taking the time to, I have a camera, I have a microphone, I have the internet, like use technology to your advantage. It's there.
Yeah, no, it's super important just the communication because like years ago I worked with a financial company and they were heavily invested in financials. The financials were tanking, blah, blah, blah. And they just did like a quick, they did like a little webinar and just said, hey, I'm on it. Don't worry about it. I'm not asleep at the wheel. I see what's going on. We're reshuffling the portfolio, blah, blah, blah. And people just took so much comfort into seeing his face, understanding he's not panicking, because they want to see your emotion. And the fact that you basically have your investor's best interests at heart. So communication is super important. And I'm glad that you're doing that, because it lets people know that you care about their investment. You're not just taking the money and run, you're looking out for them. And, it's important.
Yeah, well, my future relies on their success.
Right. Yeah, and you're doing well. Now, you made a powerful analogy between investing and attending a concert, the euphoria and the inevitable ending. So can you share how that metaphor plays into helping clients manage expectations?
Yeah, like when you go to a concert, it's like euphoric, like you're full of energy and like you're so happy. And that's how everyone is supposed to feel when things go down with investing. That's actually when you're supposed to feel euphoric versus most people are feeling euphoric on the way up and then super depressed on the way down. So not even looking at it as an opportunity. So essentially, if you could reverse your psychology and your mindset around like the good days, you're like, oh no, like investments are getting more expensive. Like that's making it harder to make decisions because when things get more expensive, it's harder to find good opportunities versus when there's a shift in the system and a short circuit, that's actually where investors and people who are investing for the long term could make decisions to set themselves apart from the crowd.
Yeah, again, on the investor relations side, it's true when clients, their stock price goes down, that's a great buying opportunity. When you look at the historic, value of the company, it's like, don't panic. Now you can get 10 times more at the same price you would have got 5 years ago. Take advantage of that, But most people don't know that sort of thing. So educating them and explaining and showing, the statistics and whatnot, it's like you say, it's a big awakening for a lot of people.
Yeah, I mean, you could probably remember. You remember Black Monday?
Yes.
Everyone remembers Black Monday. What no one remembers is the stock market finished positive for the year in 1987. Everyone just remembers Black Monday, but overall it finished up. But everyone's, in investing and in life, a lot of people self-identify with problems. Like if they have no problems, they almost lose their identity. So some people just need something to
complain about,
bitch and complain about. Yeah.
Exactly. So you're seeing more interest in sustainable and impact investing. So how do you help clients align their financial goals with their personal values in this area?
Well, most financial advisors will like ask you a generic question and be like, okay, you feel confident taking this much risk, so we're going to put you into this portfolio because that's what you told us. Well, the first question I would ask myself is this sort of strategy going to allow me to achieve my goals? as fast as possible. Because you could be a conservative investor, but if that means you have to work until you're 160 years old, is that a strategy you want to take? So you have to step outside your comfort zone in order to achieve the goal. And if you're not willing to step outside your comfort zone, you may not achieve your goal at all. So you have to ask yourself, like, well, would you rather remain comfortable and have a 10% chance of achieving your goal, or step out your comfort zone and have a 72% chance of achieving your goal? I mean, the choice is yours. I mean, I can't help you if you're not able to step outside your comfort zone. However, most financial professionals will just take your money, put you into something that you have no chance in winning.
Yeah. It's true. I've never once had somebody, they'll always say, okay, your age, your circumstances, conservative, high risk, whatnot, but they never explain, like you said, okay, if I go conservative, I'll basically be working till the day I die. Like, you never gave me a time frame on when I could potentially see any, any positive from this. It's just, they have like categories. They'd like read a textbook, A, B, and C. Where do you fit in? Okay, we'll put you in B. But explain to me, because again, what I don't know. I mean, I'm relying on my financial advisor to do what's right for me, because I have no clue. That's not my specialty. And sadly, a lot of people, they just read through the textbook, like I said, the salesman mentality, and just plug you into a corner and hope for the best. That's not
Yeah, I
right.
mean, the barrier to entry to become a financial professional has become pretty low. So, I mean, you're going to have a lot of people in the industry who are career changers, don't have a lot of experience. They, could be at a job where they're making $35,000 a year. Then they pass the test, get a license. Now they're making $60,000 a year. They just changed their life. I mean, they could double their income, which is phenomenal for someone. But they're going to do what they're trained to do.
Right.
They're not going to think freely on, hey, investments are down a lot right now. Things that are considered risky are actually less risky than what's considered conservative. And that's the thing, is a textbook is never going to save you from what could be happening, because as we know, the world can change and the world changes fast. So something that's written in a textbook, whether it's in like the medical profession or the investment field, the next day it could be outdated.
Yeah. And it is 100% true, because like I said, I don't have experience in this, and I went on job interviews, and basically they throw, the semi-decent, profit, but major commissions. And I could pretty much be like a financial advisor, like ASAP, and just start, according to them, you can make millions and blah, 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 or, 200,000 a year. What experience do I have in this? I would just follow their manual, hope for the best, and take your money because I want this, $500,000 commission. That's the world we live in, unfortunately. Now,
it is. You just got to find the right people.
Exactly.
Which, nowadays, since social media is available to everyone that has a phone, it makes it harder to, sift through the noise. Yeah. And just because someone has a lot of followers does not make them an expert in any field. I think Charlie Munger from Berkshire, he said, if someone was really good at investing, why would they have to sell a course to teach you how to invest? It doesn't make any sense.
Yeah. No, that's why I like doing, interviews like this. I'm learning from people who actually have the, telling your story. You have the experience, you have the know-how. You're not out here just trying to, get followers. You're out here just telling your story about what you do and how you help people. Because I always say that too. So many people, they're these millionaires and they have all these courses and whatnot, and you buy into it initially. And then when you start seeing there's like 500 people on this, webinar or whatnot, and you're asking for like, $500 for this, when you start doing the math, it's like, that's how you're making your money. It has, because if you were that rich, why are you telling me to sign up for this course? I totally get it. But yeah, I appreciate what you're doing. And I like how you're, just laying back and telling the story. I'm here if you need me. I can help. If not, that's okay too, but sometimes, seeing the good, the bad, and the ugly out there gets people to really stay focused on, let me find somebody who I can rely on, as opposed to, just these random.
Yeah. I mean, part of me is like sad that I see that what advice people are getting from people that have big followings. And I want to do something about it. So I'm doing my best. I don't have all data. I'm not building a course. I'm not selling anything. I just don't want to do that with my time. I'd rather go outside than sit in front of my computer to try and
Right.
make money.
No, but even just doing the communication with people, that's huge, you know?
Yeah. On the flip side, I guess this could be like, you got the angel on one shoulder, the devil on the other. The other side is like, well, if all these people are listening to these people and that's their choice and they want to make those decisions, it's just going to make my job easier because I see a lot of people are making mistakes. And if more people are making mistakes, that's more mistakes I could capitalize on for the people that do trust me. So, I mean, that's a little,
100%.
I mean, it's selfish of me, but at the same time, though, it's not my fault if people decide to float the mainstream versus actually take the time to figure out what's in their best interest. Everyone wants everything now.
That's the world we live in. They want it yesterday. And you're 100% right. You're here if you need me. If you want to follow the trend, go for it. When that doesn't work out, you still know where I'm at. You know?
Mm-hmm.
Now, you talk about the importance of participating in both the good and the bad times in the market. So how do you educate clients who might be tempted to time the market or make emotional decisions?
Well, you don't ever want to make emotional decisions. You have to put your emotions to the side. And I mean, I've been doing a lot of reading about like the mindset and like figuring out how to like make my mindset better. Because I mean, once you start learning a subject and you master it, I mean, there's like a lot of great athletes out there, but their mindset versus another athlete's mindset could be the differentiator between making it as a professional and then just being like, well, I played like Division I sports, but I couldn't make it. Mindset comes down to a lot of it. I mean, I guess one of the best examples would be like Tom Brady, six round draft pick, but I mean, he was willing to outmind everyone and work harder and focus on the mindset. And having a good mindset is definitely the differentiator. Also, you have to know that if you don't know what a bad time is, then you don't know what a good time is. And if you don't know what the good times are, you don't know what bad times are. And you have to realize that you can't have bad times without good times, and you can't have good times without bad times. Right now, as we're doing this beginning of April podcast, right now we're in a bad time, but there's never been a time where bad times last forever. So you have to remember that. It's like, all right, this is a bad time. What could I do to capitalize on this bad time? Do I do nothing? Do I make an adjustment? But eventually, this bad time is going to eventually turn into a good time. I don't know when, but it will.
Yeah, history doesn't lie. I mean, you go back decades and, nothing lasts forever. So I agree. And just educating people on, like I said, like people say, oh my God, this whole tariff situation, blah, 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 the stock market's tanking. What can you buy now then? Because this is an awesome time to jump in, but if people don't know that, they're just thinking, oh my God, I got to stuff my money under my mattress because the stock market's bad. Historically, it's never lasted. I mean, we've been through world wars, blah, blah, blah. It'll come back, And so now inflation, interest rates, and global trade policies, there's a lot happen economically. So how do you help clients filter out the noise and focus on what really matters to their long-term plans?
Well, all of these things are made by people. So they're made up by people, so they could be mastered by people. So, I mean, if you think about it, before all this happened, we didn't know who would win the presidential election, but we knew what one person that ended up winning was going to do, and they were very vocal, we're going to do tariffs. And so if you were not listening and you're upset, like, oh, like, I hate this person, well, if they end up winning and you're like, well, I need to make sure I move some money out of things that are going to be affected by tariffs, which tariffs then affect global trade, which then tariff is essentially a tax on goods, which affects inflation, which inflation is increases in prices. And you're like, well, maybe I shouldn't invest in these companies that make all of these things overseas because they could be impacted by tariffs, especially if it's made in China, which China is the main focus on tariffs because essentially the United States has supported the growth of China by buying everything from them. And if you made some strategic shifts knowing that was going to happen versus complaining about someone that you don't like, you could have possibly avoided as much pain.
Yeah.
So, I mean, the writing's on the wall. It's just a matter of like taking the time to actually do something about it. And there's nothing you can do about it. You just have to accept it and make strategic adjustments because you can't control what these people do in politics. I mean, you can vote for them, but after you vote for them, who knows if they're even going to do what they say they're going to do.
But like you say, paying attention, because who was it? I think it was Warren Buffett. They said he had, I guess had read the signs and got out of a lot of things, and his investments are skyrocketing right now, but he was paying attention and, for good or bad, whatever you vote on and all that good stuff, he kind of ventured into navigating his investments, I guess.
Well, there's a couple things that people aren't talking about with Warren Buffett. First of all, they own Geico, major insurance company, and insurance companies have something called float, meaning they're able to invest the money that they get paid from policies. Because, I mean, you have a car insurance policy, you hope you don't have to use insurance. The insurance hopes you don't have to use them either, so they have all this extra money. So Berkshire Hathaway always has extra cash on hand because they're in the insurance business. And if there's some sort of catastrophe, they need to make sure they have the cash to pay out the policies so they don't put their business at risk. In addition to that, they wanted to sell to take advantage of the lower corporate tax rates. So tax rates could change. Tax rates for corporations are at historic lows. They knew what was going to happen. So they're like, well, if I think taxes are going to go up, I might as well sell while taxes are lower, raise the cash. And then the most favored investment of Berkshire Hathaway is Berkshire Hathaway. And if you have a lot of cash, you can do a stock buyback and buy your stock back at favorable prices by using that cash. And by doing that stock buyback, you essentially have less supply of your company publicly traded. So then you have less stock price manipulation compared to if you do a stock split, when you increase the supply, like NVIDIA did recently, then your the volume of trading is going to increase because there's more supply in the market, and that makes the price of your company harder to dictate by the market swings.
See, this is why you need to listen to this guy. See, I didn't know any of that.
I mean, it makes sense, right? Like,
Yeah.
if there's a downturn in the market and I have cash and I like my company and I can buy stock of my company at a better price,
Right.
why wouldn't I do it?
Yeah, no,
I mean,
100%.
it's simple solutions to complex problems.
Right. Nice. Now tell us, with so many digital investing platforms available, what do you think is the real value of having a personal relationship with a trusted advisor like you? I mean, obviously, you know a whole lot more than I'll ever know in this space. Let's start with that.
There's never been a program, there's never been a spreadsheet, there's never been a software that is going to be able to hold your hand through a difficult problem or prevent you from doing something silly. I mean, ChatGPT could, a ChatGPT could walk you through, hey, I'm going through this problem. Could you walk me through what I need to do? And it's good at that. But when it comes to making decisions fast, especially with investing, you need someone who knows when to do it. A computer algorithm, if everyone's trading on the same algorithm, then everyone's trading on the same data. Warren Buffett has been doing this before computers were even invented. So if he can do it without computers and technology, I mean, it's useful and it's helpful, and it makes my job a lot easier using technology because that I'm able to do things now that would require me to have a staff of 10 probably.
That's awesome.
So I'm able to be a lot more efficient, and technology is great, but it isn't going to solve all of your problems. It's a good tool to have, though.
Yeah, get you there, but not complete. Yeah.
Mm-hmm.
Now, your motto seems to center around growth, family, and philanthropy. So what's your long-term vision for 369 Financial, and how do you hope to impact the financial lives of those you serve?
Well, I don't really care about being the biggest. I would just like to be the best if I can. Mm-hmm. So whatever it's going to take to be the best. I'm not sure what that looks like. I talk to people and they're like, what's your 5-year plan? I was like, well, I have daily tasks. And if I do my daily tasks every day, and eventually I'll end up in a better position than what I'm in now. And that's the way I view things, rather than a lot of people are like, hey, I want to get to $10 billion under management. Because if I get the $10 billion under management, I'll be making this much money. And I mean, obviously, everyone wants to make more money. Everyone wants to do better, myself included. However, I feel like there's a good way to do it. And if you just keep it real with people and do what you feel is in their best interest in terms of putting their money into the best places possible, eventually it'll all work out over time. I don't know how long it's going to take. It could take a year, it could take 10 years, 20 years, but I mean, you just got to do it.
Yeah, I mean, it's kind of like the same in my field where some people, they just set out and they start charging crazy high fees and they don't care if you can't afford it. They just want that money up front. And that's great. Where I'm the opposite. I charge less and I'm like, I'd rather have a relationship with you for years because I think you never know who knows somebody. You can refer me to, and again, I'm not getting rich overnight like this, but I have so many valuable relationships and I feel like I've made an impact on their life. That's more important to me. I might not be retiring tomorrow because of this, but, everybody has their own different, needs and wants, I guess. But I think what you're doing is really good. And, you obviously care about what you're doing. You know what you're doing, that's for sure. And that's going to have a bigger impact and have you kind of up higher than somebody else who's just, like I said, one of the companies I interviewed for, they're a very well-known company. But I can tell you from experience going to their, seminars, and all you are is hiring just random mojos who just be a salesperson to sell your product. Yeah, you might have great because you have a great ad budget, maybe. I don't know. But I could tell you if you were willing to hire me and I don't know anything about this stuff, that kind of gives me a whole new take on that sort of company.
Mm-hmm. Yeah, I mean, there's an opportunity with every person that you talk to. It may not be as high of a sale as you'd like, but hey, sometimes people are like, hey, I'm willing to pay this. And if you have the time to help them, it's like, all right, they're willing to invest a little bit. You help them and you could ask for a review or you could ask for something in return, some sort of concession. And eventually, if you get enough reviews and build up a reputation, now you're going to start to attract those bigger opportunities. But without, you never know. Someone could win the lottery.
Yeah,
Someone
just that
inherits money.
reputation.
You just never know what might happen with someone.
Yeah, I've seen it repeatedly. You have that reputation. You're going to be that person that someone goes to because they're going to say, you didn't try to screw me over. You obviously were doing something because you thought it would help me, and it probably did. But other people are just, like I said, when my kids were little, I didn't have a fortune. I invested every penny I had with them. And whatever stockbroker I was using at the time, just let it go to zero. And I'm like, really? They didn't care. It wasn't their $1 million client, so who am I? It's like, but you have no idea the impact that had on me. So I would never recommend them to somebody else. But even if the stock market was doing bad, but I didn't lose every penny I had, you're going to be the person I'm going to refer all my friends to because you obviously had my back, So, yeah. But now, anything else you want to cover that we didn't already talk about?
No, I appreciate you having me on. I'm very easy to find online. You can go to 369financial.com or just Google search my name. I'm the only Josh Krafchick that I'm aware of. And you can just find me on your favorite social media platform if you decide to follow or send a message, or if you just found me here and that's what you want, that's cool too.
Awesome. Well, thank you again for being on the show. Again, that was Joshua Krafchick. So thanks for listening to Real Conversations with Patricia. Never miss an episode by subscribing to the channel. Be sure to click the bell notification to see new episodes. So thank you again.
Thank you for listening to Real Conversations with Patricia, talking with some of the most brilliant minds on their journey to success and their recommended strategies. Please leave your feedback and visit pristineadvisors.com to get the latest and greatest business advisement on the planet. Feel free to let me know your thoughts, suggestions, and anything else you'd like me to cover. Together, we can make success happen for all.